Everybody, this is Jim at SP500chart.com. It's about 4:20 on January 15th, 2014. Let me read this to you, then we'll take a look at the chart, and I get to eat some crow. Sorta. Just want to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw these lines on charts, but you have to draw your own conclusions from your own research. And please do make investment decisions that are suitable for your personal financial situation. That's going to vary from one emotional mindset to another. And always keep in mind that I am not a licensed financial professional. I'm just a guy who draws lines on charts. So take what I say with a grain of salt. And today, that will be a little bit easier. Let's find out why. Well, coming into today's trading, let me get rid of my moving average again. There we go. Coming into today's trading, we were looking at a series of wedge shapes, which was just fascinating. And really, well, let me just recap on that. This was a wedge that we were in at the end of November. That broke down. We formed another wedge through the first half of December, broke out of that, made this skinny little wedge through late December. Then we hit the first of the year, made a wedge coming down. That broke out. Started to head back up in a wedge. That broke down. So far over the past couple of months, we've seen rising wedges break down. We've seen descending wedges break up, and they've been performing very, very well. Now keep in mind, if we test these wedges, one of the things you need to keep in mind is that a wedge does have a general target to it, absent any other technical indication to the contrary. And let me just tell you what that is. If you have a wedge form, the tendency is when the wedge breaks down for the price level to return to the level that was in place right as that wedge started to form. And for example, this wedge right here started to form up around 1810 when it broke down, taking us down to 1770. Then it broke up. It did. It made that minimum target, got to 1810. This wedge, when it moved up and broke down, you would expect it to come back to about 1808 or so, or 1800 even, where this pattern started to form. But that didn't happen. So then this wedge has now taken levels back to where we were prior to it forming. So this is kind of the odd man out right here in some ways, because even though we did get back to that 1822-23 level in that dip we had there on the 13th, it's interesting to note that it looks like we didn't really form anything after this wedge. We've seen wedge after wedge. Then all of a sudden, that was just like a one-day trip down to test some support down here, and now it looks like the market has just said, "What was I thinking? Let's just get on with business." And here we close today right at the same levels we were at the end of the year. So what's the crow I'm going to eat? Well, I thought today would be a down day. And I think if I saw this chart up until what we saw today, if I saw this chart 100 times, the right call is to be prepared for selling pressure. because we have a broken support line, a back test to it. Perhaps there's some mitigating circumstances with the reasoning behind this move, or maybe the reason we bounced here is because we were just close enough to this cluster of support lines that this resiliency down here around 1816, 1815, just there was too much support down here for us to see much more than what we got. And to remind you, since we know that wedges tend to take things down to the level that the price was at before they formed, that level for this wedge would be about 1823. So really, I guess you could say this made its, quote, target, and then some. So really an interesting day today. We closed over this resistance line that we've had in this pattern. So not only did we bust up and get back into this pattern, we actually took out part of the top side. I have felt for a while that the market, that the S&P really wants to keep moving up. And part of the reason is, let's be honest, there's no other game in town. Sorry, I just got interrupted in my office. But what I'm saying is, I believe where I was at was the fact that we closed over this line. It looks like we're kind of flagging here today. Sideways, I almost said sideways momentum. There's no such thing. Just sideways. And I felt for a while that the S&P does want to move higher, and I think we may now be primed to get ready for putting on a few dozen points to get up to the 1870s. It just wouldn't surprise me one bit. Also, we were looking at this line, and again, I threw this up there yesterday, saying, you know, I think if the S&P can get over this line right here, then we may be will likely say that would be a signal that this selling or sideways consolidation that we've seen for the past couple of weeks is getting ready to be over. And here's what's interesting. Are we looking at another left shoulder head? I don't know. But if we were to get up to 1870, that sure would be another instance in which we saw some freakish pattern that actually they're looking stranger and stranger, folks. So, guys, there you have it. Hopefully, you were patient and we're not in any kind of sense of panic, because we stayed above this line, and that was a clear and distinct possibility. At some point, we're going to have some bad days. It's just been so long. Does anybody remember when the last day we had where the markets were down 2%? I don't remember it. So there you go. That's your video for January 15th, 2014. Looks awful strong here. There is a possibility of a double top up here. That would not be confirmed, however, until we got lower than this level right here. So I'm not that worried about that, because this looks more bullish right now than it does bearish to my eyes. The way we stayed right in this range all day long. Let's see if we get a little bit more momentum tomorrow. If we do, then I think we head back up and we test this brown line, and that would put us into the low 1870s. So guys, thanks for watching the video. Thank you. I'm eating some crow today, but I'll say it again. I think that was the right, from just looking at the chart, that's still a call I would have to make. And if I saw this same thing 6 months from now, I would have to say the same thing. That's why it's important to always keep in mind that chart analysis isn't fail proof. It just tells you the likely thing that you can expect, not the certain thing. There's nothing certain in stock chart analysis, except from time to time you're going to miss it. So guys, thanks for watching. Take care. Let's see if we get upwards momentum, or if maybe, like I said, there's a possibility this could be kind of a double top. But it's not looking so much like that to me, to be honest with you. Thanks for watching. Thanks for your support. Take care.